Welcome to Globefolio. So, in this channel, I discuss everything stocks, both from Nigerian stocks, US stocks, and then we're also looking to expand into other international markets. Then, we would also be discussing crude oil very, very soon. So, in our last section, I shared a deeper analysis of Lasako, and I discussed what my take on Lasako was by looking at fundamentals of Lasako, technical analysis of Lasako, and as well as sentiment analysis, and they all point to one thing: Lasako is a buy. So, and then I think I have my very strong buy around 1.8 on Lasako. Now, today we're going to be looking at another interesting dividend growth stock, which is GT Bank. GT Bank. Now, interestingly, GTB has just released its results less than 24 hours. So I think that is actually what I've been waiting for before I post my analysis of GT Bank. So let's quickly discuss GT Bank. Is GT Bank a buy at 38 naira? Is it a buy? Does it has is there room for upside potential, or is 38 naira looking so high that many of us might think, oh, GTB have moved from 15 naira. Sorry, I've moved from a low of 20 naira or 21, 22 to 38. So I think it's high. Now, I always hear people tell me that because a stock price is already selling for 30 naira, 100 naira, then that stock is very high. The truth is that if you want to know whether a stock is cheap or expensive, don't look at the price of that stock. The price of the stock does not determine how cheap or expensive it is. What determines whether a stock is cheap or expensive is the growth rate of that company. A stock can be selling for 38 naira and still be cheaper than another stock that is selling for 1 naira 98 kobo. It's not about the price. A lot of people will start telling you PE ratio is already high, it's already at. Stop that. If you want to look at the valuation of a stock, pay attention to the growth rate of that company. A stock that is selling for 38 naira can still be growing faster or can still generate more return than another stock that is selling for 1 naira, even 50 kobo. Do you understand? A stock can be selling for 500 naira and still be cheaper than another stock that is selling for 5 naira. Everything boils down to what? The growth rate of that company. So I'll discuss that some other time. So here we're going to look at GTB stock. So this is GTB at 38 naira. So let me quickly do a dive into the fundamental analysis of GT Bank. So first, we're going to review the recent results of GT Bank. So GTB has just released its result, and I'm so excited. But there's a red flag that I'm going to point out. So I'm going to talk about the good side and the bad side of this result. But overall, it makes a lot of sense. Seeing EPS move from 2.7 in Q2 2022 to 9.94. It's huge. So let's look at it. Now, this is GTB results. You see how the bank has delivered, in short, good numbers, interest income. But here is what I'm very particular about somehow. Now, if you look at the um, yes, loan impairment right here. Now, net interest income actually went from 120 billion. These are thousands in thousands of naira. 120 billion to 177 billion, which is very okay. So you can see from 134, that's the net interest income, to 214. And then interest income on financial assets, you see from 12 to 11. Interest expenses from 26 billion to 48 billion, a bit higher now. Then overall net interest income came out better, 120 to 177, which is addition of almost of let's say like 57 billion naira, or there about 56 to 57 billion naira. Then overall net interest income. But here is my point. I don't like the loan impairment charge that moved from 3.5 billion to 82. That's a red flag for me. I don't like it. GTB needs to look into their loan book. They need to pay attention to their loan book because this is too significant to ignore. This is significant. If the bank is able to recover this in subsequent years, I think it's most likely going to add to their revenue. But I think writing off over 82 billion compared to 3.5 billion, that's a massive growth. And that's a red flag for me, meaning that the bank needs to pay attention to its loan book. If you check the drill down of this, you will most likely see where it's coming from. It's coming from loan and advances to customers, meaning that I think there are some customers that have been deemed as some debts that have been advanced to customers. I think they have been deemed as irrecoverable. That's why they actually had to write them off because they saw the tag, which is lifetime. Do you understand? So GTB still need to work on recovering certain portion of it because if this trend continues, it's actually going to affect their core operation. So it's going to affect their loan business. Banks are involved in different type of businesses. Some banks are loan-driven banks. Some other banks are investment-driven banks. Then some others are hybrid. So how do you know whether a bank is loan-driven, investment-driven, or hybrid bank? It's very straightforward. Go to their balance sheet. Look at their exposure. Look at their exposure to loan. Do you understand? We look at their exposure to loan and then look at also their exposure to investment. Now, the exposure to loan divided by their total assets. That will tell you whether the bank is loan driven. Then when you compare that number, that ratio to their exposure to investment to their total asset. So if the exposure to their investment divided by total asset is actually higher than exposure to loan to total asset, it means the bank is an investment driven bank. I remember sometimes Stanbic IBTC was more investment. They were tilted towards investment. I think majority of their assets were exposed to treasury bills, bonds before CBN had to step in um, to mandate banks to give out more loans. And then if any bank is not able to meet up to the minimum loan book, I think they will most likely be fined. I remember then when that I think those are some of the reasons CBN stepped in because banks were actually withholding money that was supposed to be advanced to the private sectors, and then they were investing in treasury bill because treasury bill seems to be like free money for them. Why should I give a customer money when I know I could invest that same amount in bond, in treasury bill, and still get almost the same amount? And here is risk free. And here I'm going to be chasing my customer. So I think those are some of the things the bank CBN saw that made them to step in at that point. So some banks can be loan driven and then others can be investment driven. Another bank that is loan driven is Fidelity Bank. Fidelity Bank, in short, is one of the banks that have gotten it right when it comes to its loan business. Like they've been able to manage customer deposits. They've been able to manage loan and advances to customers to the extent that if you look at their net interest income, is paying off. So what am I saying in essence? GTB still has a lot of work to do in trying to address the issue on their loan business because this is actually a red sign for me. If you take one of the major factors that's responsible for this uptick in profit, if you take it out, GTB profit would have been a lot lower or at least marginal. Even if there's a growth, it's going to be marginal, it's not going to be significant. If I take out 377 from this here, other income, which actually came from exchange rate gain, and I also take out um, yes, I think this is where the major uh, driver is coming from. So if I take out 372 from this 280, you see that this is likely going to be lower. Do you understand? This is likely going to be lower than Q2 2022. So that means if it wasn't exchange rate unification, GTB would have reported a lower number. So, and that would have been a result of this loan impairment charge. So GTB has a lot of work to do on this part. So, but let's continue. Now, you can see right here, it actually affected their net interest income from loan impairment charge from 117 in Q2 to 94 because of this. 94 because of this. And then net fees and commission 54 to 58, fees and commission itself, blah, 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 and their expenses. And the net fees and commission 47 to 51. Then if you look at their net trading gains on fair value instruments, 23 to 16, a dip, and then you see other income. If you check note 15, you will see that major part of this other income will be driven by FX gain, FX gain, FX gain, which is very, very important. So now, if you look at FX gain, you might probably be thinking, is this a sustainable growth? No, it's not sustainable because I'm not sure CBN is going to devalue the naira to that extent again. So that means we might see a bit of stability in FX going forward since CBN is looking to step in. So GTB may not be able to generate this kind of return again. But overall, I think they need to watch their loan book because if FS remains constant at this point and then GTB is not able to address this loan issue in 2024, that might actually hit it might actually be very visible because a lot of investors now are now being clouded by this fact that GTB revenue went up or profit went from 177 to 288 without paying attention to this red sign right here. So if GTB is not able to manage this part of their book in 2024, it will not be good for them. So they need to look at this very well. So here you see at the end of the day, their Q2 profit before tax went from 103 to 327, which is very, very good. Then profit after tax from 77 to 280. Now, if we drill down, they reported a solid growth in earnings per share, which is what every shareholder is interested in. I want to see the earnings per share. I want to see the earnings that is attributable to equity holders. When you are analyzing the company share, don't limit yourself at this profit for the period level. Don't end yourself or don't try to end your analysis. At this level, or else you'll be changing your analysis. So drill down to this is where you are most interested in because if this company is to distribute this money, how much am I going to get? So that is you see the growth from 2.7 to 9.94. That is massive. That is good. So I like to do something when I'm analyzing a company's financial statements. And that thing I like to do is I like to check the trailing 12 months of that company. Trailing 12 months. With trailing 12 months, you are able to tell whether the company is on track to beat its previous year. Trailing 12 months is when you add the last four quarterly results of a company. So what's the most recent quarter as far as financial statement is concerned? Is second quarter. So trailing 12 months will be second quarter plus first quarter plus fourth quarter 2022 plus third quarter 2022. So when you add the last four results, quarterly results, then that will give you an idea whether the bank is on track to beat its full year result. So the first question is, what is GTB full year result in 2022? So I've taken my time to pull out the financial statement. So GTB 2022 full year result is was 5.95. That means they reported earnings per share of 5 naira 95 kobo. So you see that in Q2 alone, they've already covered the full year. Q2 2023, they've already covered the full year of 2022. Q2 2023 is 9.94. Then Q4, that's full year 2022 is 5.95. But that's not where I'm going to. Let's move on. Now, if the full year of 2022 is 5.95, so I want to know what the Q3 and Q4 2022 is because that's where I would then be able to extract the financials of the company. So as far as trailing 12 months is concerned. So I did something again. I then extracted, you can see right here, I then extracted the Q2 2022. You can see Q2 2022 is 2.7. Can you see here? 2.7. So Q2 2022 is 2.7. So if Q2 2022 is 2.7 and the full year of 2022 is 5.95. Then it means that third quarter and fourth quarter, which is second half of 2022, will be 5.95 minus 2.7. Let me take that again. The whole of 2022, the company reported 5.95 kobo as earnings per share. Now, first quarter and second quarter 2022 was 2.7. That means third quarter and fourth quarter 2022 will be 3.25. So 3.25 is second half of 2022. So my trailing 12 months will be first half of 2023 plus second half of 2022. That will give me trailing 12 month, which is the last four quarters. So 3.25, we're going to do 9.94 plus 3.25. So that means my expected full year result of GTB for the financial year 2023 should be 13.19 as at now. That's what trailing 12 month is. 13.19. So 13.19 compared to 5.95. 13.19 minus 5.95. That means GTB should exceed 2022 results by 7.24. So 7.24 divided by 121%. So my expected growth in full year result of GTB, remember it's expected. We've not seen Q3 2023 and then we haven't seen Q4 2023. So that's why I like to use trailing 12 months. I don't want to be too optimistic about the company result. Let's go with a realistic figure. So right here, the trailing 12 months, that's the trailing 12 month of GTB is 13.19, and 13.19 is already 121% above the 5.95 reported. So that means GTB is actually on track to beat its previous year. That's the first part. Now, from a valuation standpoint, I like to look at what is the fair value, what's the average fair value of GT Bank stock at 13.19 EPS. What should GT Bank stock be selling for at an average price of 13.19? So that actually means again that we have to factor in the risk-free return, the risk-free rate of GTB, the risk-free rate of FGM bond. So as at when I'm recording this video, the risk-free rate of FGM bond is around 13%, between 13 and 14%. That means if you are to invest, let's see if we can find that. Um, FGM, FGM bond yield. This is it here. You can see a Nigerian government bond yield has 14.331%. You can see here 10-year versus 2-year bond spread. So that means if you invest, this is the latest interest rate, 18.75. So if I'm going to be investing in FGM bond, then it means that I'm going to collect an average of 14.331%. That's risk free, no risk. Now, if I have to put the money in a stock, then that means I have to be compensated for additional risk that I'm going to take. So, averagely, I like to put it at 10% to 12%. So meaning that if I want to put that money, which would have given me 14% risk-free in a stock, I must be compensated for that additional risk. So and because of the nature of Nigeria economy, I like to factor in a risk premium of average of 10%. So when I add 10% to 14, that means my return, average return on stock should not be anything less than 24 to 25%. That's the average return on my investment in stock market. So any stock that is not giving me at a price that will give me 25%, then that means it's not probably a cheap stock. So what am I trying to say? It means that if I compare, try to value that stock at 25% averagely, and the price I'm seeing is more than what the market is saying or what the stock is currently selling in the market, then it's cheap. But if I compare and it's less than what is obtainable in the market, then it's extremely expensive. So what am I saying? I'm going to calculate the fair value, average fair value of GT Bank stock at 25%. So let's go back. Now remember, what's our EPS on GT Bank stock? Our EPS is 13.19. So we're going to do 13.19 divided by what is the average return that we're expecting? 0.25. So that means GTB stock should not be should be fairly valued at 52 naira 76 kobo. GTB stock should be fairly valued at 52 naira 76 kobo. You can see here 52 naira 72 kobo, because if the trailing 12 month of GTB is 13.19 and then I'm looking at earning an average of 25%, it means that I should be paying an average of 52 naira, because 25% of 52 should give us earnings per share of 13 naira 19 kobo. So the fair value of GT Bank, the fair price that I think GT Bank should be selling for me to consider it an attractive stock is 52 naira. So the question is, what's the price of GT Bank right now in the market? So let's quickly look at our chart. You can see that currently GT Bank is selling for 38 naira. 38 naira. So if you compare 52 minus 38, that's 14 naira. So 14 naira divided by 38 naira, I mean GTB is average of 36% undervalued. So if the fair value of GT Bank should be sitting around 52 naira and GTB right now is selling for 38 naira, it means GTB is extremely undervalued. That's what it means. You can see how I have moved from the financial statement to calculating the EPS of GT Bank. From EPS, I've been able to find the fair value of GT Bank, and then we are moving to the technical side. Now, look at the technical side right here. Technical side is whether GT Bank is a buy at this point. Why should I carry out technical analysis of every stock? It's important because it's technical analysis that will tell me whether I should buy now or not. because fundamentals that I've done will tell me what to buy, but technical will tell me when to buy. Is this the right time to buy GTB? Let's quickly look at GTB stock. Now, look at how GTB stock has respected important key level. If you have followed me multiple times, I'm always a fan of key level. I'm always a fan of drawing certain area of demand and supply in the market. So look at this point. You see how GTB has been respecting 16 naira multiple times. You can see right here, this was in 2015, and this is a region. Remember, key level is not an exact price, key level is a region. So look at between January February 2016 how GTB got to that level, then bounced back immediately, and then you can see how the bank rallied to an average of 56 naira. This is also another key level, which is an all-time high price of GTB stock. Now look at the massive dip to the downside. Now at the point of coming down, the bank also respected this important key level, which is around 38.1. Look at how the bank broke this level, retraced again, and then found resistance. You can see at this level before it eventually crashed to 17 naira. So the last time the bank tested, the first time the bank tested 38 naira since 2018, the bank actually lost immediately, and then it crashed to 17 naira. Now, from 17 naira, the bank rallied back to the same 38 naira. Now, the second time GTB is testing 38 naira, look at what happened again. It crashed again to 17 naira. So that tells you how this particular level is very important, how this is a strong multi-year level that you should always watch out for on GTB stock. Now, after the crashed to 17 naira the second time since 2018. Look at what happened again. GT Bank rallied again for the third time. So this is the third time GTB is testing 38 naira. Now my question is GTB going to crash back to 17 naira, which is what has always happened in since it touched 38 in 2019, and then the same pattern repeated in 2020. Now, is that pattern going to be repeated again? I don't think so. Why? Because there are multiple factors that are attracting bullish sentiment in banking sector, positive sentiment in banking sector right now, from naira scarcity that helped to boost adoption of mobile payments to FX reforms. Like you can see the exchange rate unification right now, which also helps support banks that are long on USD, and a lot that is happening in the banking sector. In short, most banks have always been reporting profit year on year. But I think GTB is peculiar at this point. Why? Because it's been a long time that GTB reported this kind of massive growth in number. Look at the Q2 results. If you look at the Q2 result alone from April to June, it's massive, over 200% growth between Q2 2023, month 3 2023, that's Q2, to 3 months Q2 2022. So that's to tell you that GTB may not crash again back to 17 naira. So it means that we should be watching out for breakout very, very soon. Now, with the result that has been released less than 24 hours, it means there's actually possibility that GTB stock may break out of this key level next week. And if GTB breaks out of this key level that has been tested in 2019, tested in 2020, tested again in 2023 July, pulls back, and is about to regain that level again. If GTB eventually breaks out, then we should see GTB rally higher to at least 52 naira, which is exactly what the bank's fair value calculation is from my estimate. 13 divided by 0.25. That's what 52.76. So GTB should be selling between 52.7 or back to its all-time high to 56 naira. So that is my estimate from GTB. That's my fair value on GTB. Now, if we then look at the sentiment behind GT Bank stock. What is sentiment? Sentiment is we're looking at the investors' emotion towards the company. With all this analysis that we have carried out, we are not the only one trading stocks. So even if we buy the stock, it's not going to move the market, except other traders are actually thinking in line, or except other traders are also attracted to the company's stock. So that's why I like to look at the sentiment behind the company's stock. Look at GTB. GTB in the last 3 months has delivered 32%, and then the last 6 months is already up by 42%. What does that tell me? It means that sentiment on GTB is largely positive. It means that there's been a lot of accumulation on GTB stock. It means that investors love GTB. That's exactly what this sentiment means right here. So if you put all this stuff together that I've shared with you, from the fair value estimate of GTB to the fact that GTB is already at the point of breaking out from a multi-year level that might take it to a new high, you would agree with me that GTB is actually a strong buy at this point. So anybody that wants to take advantage of GTB right now should key in before this breakout, and considering the massive results that we've seen, then it tells me that GTB might be a stock to buy. But again, you need to be very careful going into 2024, especially as a trader, because if GTB is able to rally into 56, although it could break, because if the valuation tells me that GTB should be worth more than 56, then what should stop GTB from breaking out from that level? But I'm very concerned right now into 2024. One of my key points of concern on GTB stock is that if the bank is not able to manage its loan book by looking at that massive growth in credit impairment, that might actually hamper, that might actually hit the bank's book in 2024. So for someone that is trading GTB, you need to be extremely careful. So GTB is a good stock for investor, people that are looking to collect dividend every year, and not a stock you should be trading every year. So right now, GTB qualifies as a dividend growth stock because it's not only going to pay out dividend. Now, right now, let's look at what the dividend payout was in 2022. Look at how much GTB paid in 2022. GTB paid uh, 3 naira in 2022. So guess how much GTB is going to pay looking at the massive growth, because their interim dividend is already up by over 60%. Now, if you look at the dividend paid, they paid 89 billion in 2022. So tell me how much GTB is going to pay in 2023. You guess it's most likely going to be higher than that. And then if you compare the dividend yield for GTB, which is around 8.45. So if the bank is going to pay more than 3.1, which I think will most likely probably get to 4 naira or thereabout. So that should also take dividend yield a lot more higher than what it is right now, because dividend yield here is actually based on what they paid last year. So if the GTB is going to pay let's say dividend of an average of 4 naira, and then 4 naira divided by 38 naira, 4 divided by 38, it means GTB should be giving us a minimum of 10.5% yield, which could be a lot more higher considering the massive growth in profit after tax. So I expect GTB to pay more than 89 billion in 2023, which should give me more yield, which will give investors more return at the end of the day. So I think this is my analysis of GTB, and this is how I've been able to put GTB on my buy list. And then I've already keyed into GTB right from when it dipped to 36. When GTB was bouncing around this key level, I've been accumulating GTB massively. You can see here at this point. So let's even compare the difference between this point and this region. You could see that anytime the banks trade close to this region, you can see the massive dip. Now you can see it touched here. You can see here massive dip. Then look at the other points here. You can see here. So you can see this is the bullish engulfing pattern with 1 week gain covering almost 2 weeks of loss, with the bank recovering 2 weeks of loss in just 1 week. That tells you that there's a lot of positive sentiment driving GTB stock at this point in time. So if you own GTB, let me know. If you have contrary opinion, kindly hit the comment section. Let's discuss and let's talk about your reasons why you think GTB may not break out of 38. I'm always open to hear for your feedback. I'm always open to hear from you. And then if this is the first time you're subscribing to my channel, kindly hit the subscription button or turn on the notification bell so that when I release new videos and in-depth analysis like this, you'll be able to get them and then be the first to buy the stock, because there's nothing like being the first to get in before others. Thank you.